Tesla posted record deliveries once more, managing to build a total of 206,421 vehicles and deliver 201,250 electric cars, according to the company's production and delivery reports. Tesla's second quarter 2021 results meet Wall Street's estimates of about 201,000 vehicles, which is very impressive, considering that the automaker has been facing some important supply chain challenges in the past few months. Not to mention that Tesla's second quarter figures also fell slightly short of FactSet's expectations. FactSet's own Street account had set delivery estimates to be around 207,000 vehicles, which included 78,000 Model Y SUVs, 114,000 Model 3 sedans, and the remainder split between the Tesla Model X and Model S luxury EVs. Out of the 206,421 total vehicles that Tesla produced, 204,081 units of EVs were Model 3s and Ys, which are of course the company's more affordable mid-range cars. The remaining 2,340 units comprise the Tesla Model S and Model X vehicles, the company reported. Rewind just 4 months, the electric automaker produced 180,338 Model 3 and Model Y vehicles in the first quarter of 2021. The second quarter figures surpassed the previous delivery figures because in the first quarter, Tesla's Model S and Model X production lines were already shut down in preparation for planned deliveries. All in all, the electric automaker managed to build 180,338 cars and sell 184,800 vehicles in total in the first quarter of 2021, even as the production of its Model S and Model X vehicles fell to zero due to the ongoing model refresh. The US-based automaker does not record its staggering quarter deliveries by region or car model, nor does it report on production in China versus the United States. The automaker is currently producing Model 3 and Y vehicles at its US factory in Fremont, California, and its new factory in Shanghai, China. The second quarter of 2021 was not an easy one for the EV maker, as the company faced several headwinds, ranging from its operations and the parts shortages, the pandemic, to the ongoing chip shortage, which has plagued the auto industry all over the world. Tesla boss and SpaceX CEO Elon Musk said in a tweet on the 31st of May that Tesla had made some design decisions, in part to address the skyrocketing costs of EV production, and he acknowledged the fact that the company's frequent price adjustments on its EVs were due to major supply chain price pressures, particularly shortage of raw materials. In the second quarter, we produced and delivered over 200,000 vehicles. Our teams have done an outstanding job navigating through the global supply chain and logistics challenges, the automaker noted in its brief press release on the 2nd of July. Model S and X deliveries had been delayed several times before starting just a few weeks towards the end of the second quarter. More than 10,000 Tesla vehicles were put on a containment hold in May, which delayed many deliveries until the EV maker managed to push its new computer vision system. In the first quarter, Model S and X deliveries were only about 2,000 units, but the figure has risen to approximately 15,000 deliveries of Model S and Model X vehicles in the second quarter. It was also during the second quarter that we saw Tesla lose some of its executives, including Deputy General Counsel Lynn Miller, Tesla's longtime acting General Counsel Al Prescott, and former President of Automotive and Heavy Trucking Jerome Guillen. Despite all these headwinds, the automaker managed to deliver over 201,000 vehicles in a single quarter, almost beating the Wall Street estimates. Tesla's second quarter delivery is an encouraging indicator that the company is entering the growth segment of its S-curve. Following the release of the second quarter vehicles production and delivery report, Tesla CEO Elon Musk applauded the company's employees for enabling the company to record staggering figures in the second quarter. Congrats, Tesla team, on over 200,000 cars built and delivered in the second quarter, despite many challenges, Musk wrote in a tweet. According to Tesla's longtime bull, Gene Munster of Loop Ventures, Tesla's making notable step toward ramping up production of its two flagship vehicles, and this gives a hint that the Model S and X deliveries could rebound in the next quarter, the third one of the current year. Tesla's aggressive capacity expansion started gaining momentum in the December of 2019 quarter when the automaker broke ground, set up a new factory in Shanghai, and started producing Model Y and 3 cars in less than a year. By the end of the year, the newly established Shanghai plant had produced approximately 115,000 electric cars, increasing the automaker's production capacity by about a third, 23% delivery growth. However, Tesla's capacity expansion kicked up a notch higher last year when the company started to install more car battery production lines and tooled to boost the production capacity by over 60%. The company also ramped up its vehicle production from the two facilities, something which has seen the production capacity increase to 122% in the second quarter of 2021. It's important to note that Tesla's production capacity does not directly translate to respective quarterly financial results. According to the automaker, its EV deliveries only represent one measure of its financial performance, and it can vary depending on a number of factors, such as the cost of sales, a mix of directly leased vehicles, including the foreign exchange movements. It normally takes some time for the production lines to maximize the usage of the installed toolings. However, the automaker kicked off 2021 on a high gear, setting its capacity target at 1 million deliveries annually. Of course, Tesla setting the stage for some incredible growth, particularly with deliveries more than doubling year over year for the 2 consecutive quarters. To overcome the ever-increasing demand for its EVs, the electric automaker has 2 more new plants where the battery and car production are expected to kick off this year. These 2 new facilities are the Giga Berlin in Germany and Gigafactory Texas in, Texas. Tesla was planning to produce 500,000 Model Y and Model 3 vehicles in Giga Berlin annually. However, as a result of pressure from environmental groups and detractors, the company has not received the final approval for the operation of this facility. Despite all this, Brandenburg's Minister of Economics, Jörg Steinbach, still seems bullish that the automaker will produce its first electric car in Germany, possibly by the end of this year. And with Tesla's stunning progress in capacity build-out, alongside with the fact that the company has already delivered a total of 386,050 cars during the first 6 months of the year, it wouldn't be a surprise to see the automaker build 1 million vehicles by the end of 2021. In its first quarter update letter, the carmaker noted that it intends to achieve 50% average annual growth in electric vehicle deliveries. Even if production capacity comes closer to 900,000 cars by the end of the year, there are high chances that Tesla will at least finish the year with an annualized production capacity of over a million electric cars on a run rate basis. Already some sources indicate that the company is almost entirely sold out for the third quarter. As of this speaking, the estimated delivery time for the Tesla Model Y and Tesla Model 3 vehicles is in September and about 9 to 13 weeks from now, according to Tesla's online configurator. Last month, Tesla CEO Elon Musk noted that the production should be at several hundred cars per week soon, but the company would not be capable of producing thousands and thousands of cars per week until some upcoming quarters. With these impressive quarter deliveries, could we be underrating the automaker's growth prospects for the next half-decade once again? Considering the stock's price evaluation, Tesla investors may begin to realize that the company is better in terms of growth than it was some years ago. However, it would not be also a great surprise if the automaker continued to experience exponential growth, particularly over the long haul. There are reports that the company is planning to build more factories in the next 5 years. Meanwhile, Deutsche Bank has weighed in on Tesla's second quarter deliveries and earnings. According to the investment bank, Tesla's price target is at $900 and it flaunts an investment-grade buy rating. The bank, however, lowered its delivery estimates for Tesla from $1.07 per share to 97 cents per share. This was done to reflect softer volumes in China. Although Deutsche Bank reduced Tesla's second quarter earnings and revenue estimates, it firmly maintained the company's gross margin between 23.5% to 26.5%, with regulatory credits excluded. Still, Deutsche Bank maintains that Tesla stock is a great buy right now. If you enjoyed this video, make sure to check out these videos shown on your screen right now.